It's Sunday, October 16th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting. Yes, it's the supermoon. The moon's closest to the Earth than it's been in, I guess, a very long time. So anyway, whether that means anything in the big scheme of things, hard to say. Certainly not for me to say. But anyway, I can't talk about the markets, and we're going to start right again with crude oil here. And taking a little bit bigger of a snippet here of the picture, you can see that the sideways consolidation here has probably got to be presumed to be bullish. You know, the simple truth is that the market has not given up. And as long as it can continue to sidle, the basic presumption would be a fourth wave consolidation, probably a triangle, which should result to the upside in a run towards 52.50 or 53 bucks. So didn't really think this was going to play bullish, and maybe it won't. But for now, again, unless the market falls below these 49.50 level, it's kind of hard not to think that higher prices are coming. Okay, moving on to natural gas. Really think always do a first-rate job on this particular market. And there are no changes to the forecast here. I think that the A wave of the subsequent ABC continuation string that I've been looking at has probably concluded, and a need to get some confirmation, and we're really supposed to go back below this 317 level here, which would be a really nice convenient test of support here. And again, it doesn't have to hold here, but that would be the first logical place to look for the market to stabilize. So again, somewhere below 320, maybe a courtesy dip here. Again, it's hard to say. This is a B wave, and it could be almost anything. So, but the first time down towards that 317 level, probably worth a shot on the long side. Okay, what to say about the 10-year? Still think there's a chance that this is an important bottom. The market came back down and again tested the 62% retracement, but it has not rebounded here. So I'm not prepared to say that this is about to turn up here. And I'm starting to wonder if this was even what probable five-wave rally was actually the beginning of something. So have to keep tabs on this one. I don't know. This could be a bust. We'll see how it plays out. Again, if this could have been a five-wave rally and it could have been the end of something, and if the market starts to fall below, say, 129.20 or so, and then starts to pick up steam, and again, this is prior to making a new actual price low. The acceleration should come if this is a bust. And there was really very little support till we hit the falling support somewhere near 29.12. So I don't know whether the market's going to turn up. Certainly one to keep an eye on. Just have to wait and see. I'll update on the morning. Looking at gold, well, there are clearly buyers who are willing to take the stuff below 12.50. And my guess is that we should just keep on giving it to them. Because I still think lower prices are coming. The triangle pattern still looks to be intact to me, and I think it's probably going to maybe nothing more than gravity pulling the euro down. That may just be what it takes to bust gold. So whether or not we get another run back up to 12.62, give or take, before the market falls, I don't know, but I do think the lower prices are still coming. But get above 12.67 and I have no problem reevaluating things for the more bullish case. Okay, continuing to focus now on the euro currency, which is still going lower. I was kind of hoping, and maybe it still will, set up that we'll get a weird kind of expanded flat fourth wave courtesy rally or something along those lines. But the bottom line is that until otherwise indicated, the trend of this market is just simply down inside what's probably a consolidation. And as we're below 110 here, we should be alert for the potential of a bear trap setup. But again, even if the market does recover, I think at this point, come back up towards 170, give or take. I would think no matter what happens, you got to sell it the first time back up. Lower for the euro looks to be the call. Okay, moving on to the stock index futures. The E-mini S&P, as I believe I suggested, made another run for that resistance at 2140. leaving what I believe was a three-wave rally, which is not bullish, but it is not necessarily bearish. So I think we are probably in a ongoing consolidation where we will ultimately wind up moving higher. The 76% retracement is back around 21.15, which is conveniently right where it was before. And if you recall, we did a little below there, set up a couple of bear traps before the market resumed its recovery. So I think the best guess is that we will probably hold somewhere below 21.20 and head back up towards 21.47, which would be the 62% retracement, which I think would be a kind of a bearish target, and more realistically perhaps 21.57. Now if we fall below 21.08, all bets are off, but we'll see how that plays out. I don't think it's going to happen, and if it does, we'll talk about it on the real-time update tomorrow. So again, thinking that the market is likely going to be a high-risk courtesy dip situation here because the trend is not conclusively up. But I do think watch the 21.15 level, 76% retracement, E-mini S&P for a possible buying opportunity. Okay, concluding with the E-mini NASDAQ, which left, I believed, a three-wave type of bounce also, similar to the S&P, which is not bullish, but not necessarily bearish. The 76% retracement here is right around 47.75, and that's right above where the market had previously left a bear trap. So here too, I think the most likely scenario is a courtesy dip, a risky one to be said, but nonetheless, I think the more likely result should be continuation to the upside in what will likely be a B wave or X wave or something. And, maybe we are going absolutely nowhere through the election. So in any event, I think we more likely are not going to fall below 47.55. But again, watch 47.75 because if the market's going to slide, that will be where it really should begin. That's it for the commentary today, Sunday, October 16th, 2016. Ron Feinstein, New Wave Forecasting. Back tomorrow.